Welcome to Listen to the Market for March the 1st. Beware the Ides of March. Coming into Thursday, there were two messages from Wednesday's daily bar. The first message was, expect a smaller range. Well, so what? Expect a smaller range. Of what practical benefit or use is that knowledge? In my book, in the material world at least, unless there is a practical benefit or a practical application to something, why have it? I believe and I use the smaller range concept, the expectation of a smaller range concept, very simply to manage a position on a smaller time frame. So I'm not looking to roll up from a 15 to a 30 and to a 60, quite simply looking to establish on the 15 or the smaller time frame and to run it on that smaller time frame. So a smaller range for Thursday. Number two, the projection was probabilities favored the buy side. Now that's in direct opposition to the way the majority view the market of Wednesday's price action. Wednesday was an outside bar, higher high, lower low, down close, black rule body, the bears are in control, so therefore in a linear world the market should be down on Thursday. However, viewed through the eyes of the L.I.V.E approach and listening to the market and the stats, Thursday was a buy day. Thursday's lows have been marked on the chart here. The highs are off the top of the chart there. Let's have a look at what happened and whether the projection that the buy side was a favored side actually came to pass. Well, Thursday started through there and then finished in the wee smalls, 9 o'clock over here. The first run was upwards with 1, 2, 3, 4, 5, 6 lows not broken. That was started with a L.I.V.E set up to buy, being an RTV buy, and through there. Next movement was down, 1, 2 highs, then broken. Next movement up was just 1 bar, then broken. 1 bar, 1 bar, 1 bar, and then finally 1, 2, broken on the third bar. So yes, there was upward bias in through there and in through there. In terms of applying the top-down approach, the first campaign that came along, starter's bell 7 o'clock, was in through there, and that was formally on this black bar there, and that was an FO buy on the 60-minute. On the 30-minute, the chart of confluence, there was an FO buy, 1R as well as a GORG buy. On the 15-minute, again having broken below Wednesday's lows, clearly we're in the AA zone, the aggressive ambush zone, and there was an RTV buy, all coinciding at the same time. That bar there, and that bar there, all finishing at the same time. Next bar comes along on the 15-minute, and no, we don't go up, we in fact come down. This movement down provides another buy setup, this time an FO buy. So the entry formally is looking to enter on the break of the high and through there, according to the plain vanilla, and the ISL is down through there. The market denies us entry in there. What's going on? We move along to the next half-hourly bar, and the next half-hourly bar is also in line with the FO buy of the 60-minute. It's a FO 2R buy. The 15-minute one, there's a FIP buy, a FIP buy. Again, plain vanilla, looking to enter the high, ISL below there. Entry is achieved, been through there. Higher high, higher low, raise the stop. Almost break even. Period 2 of the campaign, clearly we're better than break even, close enough to a 1R return. Now bearing in mind the smaller range concept, managing this purely on the 15-minute time frame, we don't have the flexibility, or we don't exercise the flexibility to look to roll up on the 30-minute one. Well, practically the 30-minute one doesn't allow us to roll up anyway, so there's no conflict there. Next 15-minute bar, and we've been stopped out. From there through to there, you're looking at just under a 1R return, or just on a 1R return. So the lesson from today, or the message from today, When you learn to listen to the market rather than imposing your own view, which may or may not be researched, may or may not be backed up by stats, the smaller range projection, manage it on the smaller time frame only. Don't look to roll it. In terms of projection of buy side being the favored side, well, the evidence is clearly there. That is what came to pass. There was one buy set up there. There was another buy set up in there. There was another buy set up in there that failed, i.e. losing campaign. And there was a final one before the 2 a.m. cutoff point in through here, leading to a small, almost a 1 hour profit, which I won't share with you. It's on the price charts, and by now you should be able to start to decipher some of the setups that are presented. Bearing in mind, each setup has its own set of black and white rules. So whilst you may think you're seeing the picture, I would urge caution, because the rules may not be those that you believe them to be. That's it for me for now, for the penultimate day of the week. Enjoy and catch you Friday. Bye for now.